Well, hello, everybody, and welcome to 2023. This is our first Southern California housing market update. My name is Stephen Meade with Domicile real estate for people who love houses, which hopefully is you if you are watching this. So, kind of an interesting inflection point in the market, right? And I think a lot of people have been talking about what is 2023 going to look like. And the next 30 days are going to tell us a lot about 2023. And we've already got maybe some early results coming in. So I want to go ahead and jump in to looking at our charts. We're going to kind of weave in a little bit of what we think we're going to see here in the next 30 days and what kind of these early indications are. So bear with me here. We are going to go ahead and without any further delay, bring open our stats. So the first thing is something that I think is kind of interesting, right? That is already different than last year. And we'll have to wait another 2 weeks or so to really see this, but I want to point you on this total active listings, right? This is the total number of listings that are active under $1 million or between $1 and $2 million in Los Angeles and Orange counties. And I want to point out here, this is this year, 1/3/2023, and I want you to look at the slope here, right? Like there wasn't any let up in the reduction in inventory between, just before Christmas and now. Now, admittedly, this is always a funky time of year because of the holidays. Most sellers will wait to put their home on the market until this week, the week we are in right now. And, that makes a lot of sense, right? But I want to point out here, last year in 2022, still sounds weird to say that. I'm not used to it yet. But at this point last year, one day later, this curve had already changed shapes, right? We were already starting to get at least a gentle increase in inventory. And we haven't even pulled out of sort of the downward trend here. Like, I mean, we haven't even leveled off this year yet, which I think is interesting. Normally, we see that number of active listings just totally starts to bounce a little bit at the beginning of the year and they kind of gently climb through the spring. I do think in 2 weeks, we're going to see a lot more inventory in the market. I think a lot of people waited, but I don't think it's going to be as much inventory as we saw last year. Remember, last year was kind of an interesting market because we had a normal-ish spring right before interest rates rose. So we kind of had a little bit of maybe a little bit of inventory going into that. Then inventory went up, and then by July, this is what's interesting. You look by the middle of July last year, inventory had leveled out and are under 1 million. In fact, even started dropping a little bit, and definitely started dropping here by the middle of July. Kind of a steady downward trend. So we had a peak in inventory that happened in July. It didn't keep building towards the, until the fall and then fall off, which is what sort of normally happens in our market. So I think for a lot of people that are hoping kind of a huge inventory surge and there's just tons of houses and prices are falling, I don't think we're seeing that yet. The real story and what remains to be seen, right, is what's going to happen with demand. So if we look at where we are in terms of our new listings hitting the market, again, we are still in a very, very steep downward angle here, meaning just very few homes are coming to the market. I mean, look, this is like maybe 900 homes in the last 2 weeks, under $1 million, whereas at this point last year, it was over 1,000. So, I think you could say our new inventory for under $1 million is down by about 20%. And it looks like it's down by about the same here. We're maybe 400 new listings last year. And this year we're like maybe 200 to 300. So we're definitely seeing a lot less new inventory hitting the market, I think, than we normally would have. Now, part of this might be, again, because we were so recently past New Year's that maybe that extra day made a big difference. But I mean, look at the angle here, right? New listings were ramping up as soon as we got past the holidays. And we haven't even seen this thing pull out of a slide yet. So we'll have to see that in 2 weeks. If you look here on new escrows, again, it's kind of a similar story here. And you'll notice things were still heading down or flat last year. So even though we've got a kind of a downward slide here, things weren't great at this point last year. It took maybe a week or two for those new escrows to start happening, and then they kind of popped back up. So what I'm really looking to see this year, and we're gonna know this in the next two to 4 weeks, right? Is we're gonna see if we start to see that pop up of new escrows, meaning buyers have decided to come back in. It's a new year. This is the year we finally want to buy a home. By the way, if that's you, definitely reach out to us so we can make that happen for you. And if we look at our absorption rate, this is another one that's kind of interesting, right? We are moving the opposite direction. Last year, we were in a downward slide of absorption rate. Of course, it's always higher over the holidays because very few things get listed. And while it's leveling out a little bit, it hasn't turned that corner yet. And I refuse to think that one day makes the difference on that. So, we're seeing some indications that indicate this year is not going to be the same as last year. This one I thought was especially fascinating to me. So, as a reminder, our close prices are a look in the past. This is 4 to 6 weeks in the past. And this is based on a median price, a 75th percentile, and a 25th percentile. And I'm going to go off share because I want to explain something that I think is incredibly important to understand when you look at this graph. And I think it's understanding the limitations of median measurements. Almost all home prices that you see quoted, when they say home prices dropped 1%, they're talking about a median 90+% of the time. And generally speaking, the median is a great number to use, but it does have a couple of limitations, and there are a couple places or moments in time where it might not be exactly accurate. And one of the things you have to understand about a median is it assumes that your mix of properties was the same, right? And whether that be the size of the properties, right? So let me give you an example. If one year 10 homes sold, and we'll say the homes sold were 1,000 square feet, right? So 10,000 square foot homes sold, we could look up a median price and that would give you one number, we'll say $500,000. But next year, if maybe it turns out that, next year there were 10, 1,300 square foot homes that sold, that middle number 5, right, would be a 1,300 square foot house, and it might have a higher price just because it's bigger, because more bigger homes sold that year. That doesn't necessarily mean that prices actually went up, because we're not comparing the same thing. So, and size is a pretty simple one, but I'm going to throw out a curveball for you when we're talking about these medians. Sometimes it's not just size that we're talking about. Sometimes it might be quality. So we might have the same mix of houses selling in terms of the size, but it turns out that 2 years ago, there were a lot of really nice homes selling. And this year, or even this year versus 6 months ago, the quality level, meaning the level of upgrade on average of those homes, might be different. And so it's important to understand that. And because we're in an environment where the people who are moving, right, the demographics of those selling their homes might be different, we may not be comparing accurately. So think of this as a guidepost, but it's not really, the gospel to take 100% at face value. We're kind of working on maybe looking at a way to measure sort of that quality level. Size is an easy one. We can look up the mix of sizes and the average size of the home sold, to kind of find out, was that median home bigger or smaller? But quality level is a little bit more difficult to perceive. If you have a lot of homes selling that are either higher or lower quality, that will skew these numbers. But I found this really interesting to me. So if you look year over year, right, which is a number that I think everybody loves to sort of obsess about, let's look at where we are year over year. In this 75th percentile, by the way, this kind of 1.25 to 1.5 range, we're going to say, we saw that things started off just above 1.25. They peaked kind of over the summer, and then they gently kind of came down. And then the last couple of weeks, we've seen a couple down weeks, and we're actually below 1.25. So this is sort of a gentle loss versus a year ago. If we're looking here on our median, that number has actually, it's pretty flat, right? There's not really been much of a change year over year, and really kind of the same thing here, maybe a slight decline on that entry level property, though that's actually heading up, which is another. It's very interesting to me when I see different ends of the market, the upper end and the lower end moving in different directions. Like, I'm kind of fascinated by that, because that means we're seeing a shift that just isn't explained by the whole market. And I'm going to give you a caveat. I've said this a couple times, and I think this is really important to remember. Whenever you see a headline, whenever you see somebody publishing a statistic, right? California home prices, blah, 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 went up 3%, went down 3%, whatever they're talking about a median number that is trying to distill an entire market into one figure. And sometimes that's very workable, right? Like, I think a year ago, the whole market was largely moving in unison, right? And I mean, obviously, if the median home price goes up 10%, it's a pretty good guess that almost everything is going up, right? But when these numbers are closer to flat, you might have a situation where one county might be up a little bit and one county might be down. One neighborhood within a county might be up a bit, and another neighborhood in another part of that county and another price segment might be down. So when you get these numbers that are pretty close to flat, what you have to understand is that there might be very noticeable variances depending on your market segment, your geographic location. There's a lot of factors, and you really have to dive into the data as it pertains to you. And if you'd like help in doing that, for what you're interested in, definitely, obviously we would love it if you reach out to us, but if you don't reach out to us, definitely reach out to kind of a qualified real estate professional, somebody who, really can understand and dive deep into that stuff for what your local particular situation is. This is our still active after 14 days. This number usually, again, because of the holidays, kind of gets a little funky and goes up a little bit. But we're still kind of really treading in the zone. I'd be very curious to see, does this ease in 2 weeks? And was this just a little bump kind of like this? Or is this kind of a permanent thing going up? Our close to list ratio is now, kind of firmly right, a little bit below this 98%. And, what does this number tell us, right? This number is the disconnect between what buyers think homes are worth and what sellers think homes are worth. So back here, when we were trading at, 106%, 107% for our $1 to $2 million, that meant that sellers really undervalued their properties and buyers were willing to push the limits. This number here, if we're diving below 98, normal is in this 98 to 100 range, right? But looking at this says we've still got some sellers who are thinking that their homes are worth more than they are. And one of the effects we're seeing to kind of break it down another level in the market is that buyers' perception of homes, the ones that are turnkey and beautiful versus the ones that need work, there is just a very wide disparity on those. And we're finding that sellers feel like, my house is only a little bit, is a little less remodeled than my neighbor's. And buyers are saying, nope, your home is a complete fixer versus your neighbor's house, right? So we're seeing that disconnect, not only overall in value between what buyers and sellers think the homes are worth, but even within the segments, we're seeing certain segments in particular, sellers are thinking something doesn't make very much of a difference, and buyers are thinking it makes a very big difference in value. If we look at our days on market, this number kind of has steadily gone up. That's not super unusual to see higher numbers towards the end of the year, and then they tend to fall. But again, we are not seeing these numbers starting to fall yet. They're not even starting to kind of bend over and break even and kind of reach kind of a maximum point. So this is, again, another difference between this year and last year. Finally, we have probably one of my favorite graphs. This is really important, right? And the reason this is important is because this gives us an idea versus 2018 June, which, by the way, is 4.5 years ago now. If we look at what has happened to payments, what has happened to the consumer price index, what has happened to rents, if we take a look at these numbers, what do we see, right? We see inflation going up and then kind of starting to level out a little bit. We see rents kind of stair stepping. They took a jump right following those home payments because of interest rates. And then we saw the rents kind of slither down, but really bounce back. Meanwhile, we've seen the payments generally kind of fall. And then because of interest rates, they've started to bounce back a little bit. But one of the things that we really like to record here is this gap. And I mentioned 2 weeks ago, I wasn't really thrilled with how wide this gap was. And as you can see, it has narrowed significantly, right? This is sort of my canary in the coal mine. This is when I feel like, do we have kind of a market force that's going to need to have a day of reckoning or an adjustment? So, if you watched a video, and I'm going to put a link down below in the description because I think this is really a good video to watch. We did a video last week where we kind of looked at some of these numbers, except we went back to the year 2000. And one of the things that you're going to notice over time is that generally speaking, in the long run, I think home prices go up faster than inflation. I think housing is getting a little more expensive, and it's not maybe as dramatic as people say. It's not like in interim moments, right? It can go much bigger than this. But I think the long term trend is that generally speaking, housing will go up, and there's a lot of reasons for this versus inflation as a whole. Probably the biggest one is simply that we don't build enough housing here in California. But when I look at this chart, especially relative over the last 4.5 years or so, one of the things you notice is that, yeah, inflation's just below 120%. Our payment on a median price has gone up, 150, 155%, and rents are up 140%, versus June of 2018. But the fact that this gap isn't super wide tells me that we have a much bigger overall housing shortage problem than we do of a homes are overpriced problem. Because both of these numbers are up. And in fact, you see the rents bounce back to really kind of narrow this gap. And this gap is when you say that our market has gotten weirdly out of balance. And what's funny is if you go back to like 2006, 2007, the rents didn't really jump much at all, and the house payments went up big time. And that was a huge problem for us. And one of my theories, right, is that the difference between, say, February and today isn't home prices. The difference between February of last year and today is interest rates. Interest rates are a fairly transitory thing, right? Like they go up, they go down, they kind of cycle through and change. And so what I'm curious to see is, a lot of people are saying at the end of this year, at the end of 2023, are interest rates going to drop? They think they will. What is that going to do to this blue line? Is that going to bring this back in line with inflation, or is it going to fuel home price growth and it's going to stay at about the same level, but it will just let prices rise? And I don't have the answer to that. I'm real curious to see how that's going to turn out. But the fact that this rent line has bounced back to meet this tells me that our biggest problem is that we don't have enough housing. It's not that we have a homes are overpriced problem. Finally, we've got our prevailing mortgage interest rates. You'll see they kind of kissed 7% here in October, then they came down and they bounced back a little bit. The California Association of Realtors economist, Jordan Levine, who I respect very much, I think he's a very good economist, he has predicted something like this. He and I don't agree with sort of the severity. He thinks that because the 10-year bond has dropped below the Fed funds rate and that the Fed will continue raising, albeit more slowly now, but they're not done yet, he thinks that mortgage rates will have to go up kind of to that 7% and above mark. I'm not so sure that'll happen. I think the market can exist in an inverse for a period of time. And if that period of time is long enough, we're going to see the Fed funds rate crest, start to go down, and that'll kind of relieve some of that weird pressure of why the Fed funds rate is higher than the 10-year Treasury. So it'll be interesting to see how that one works out. But we are seeing a little bit of a bump, which I think I can definitely be I definitely am not surprised by. Whether they're going to go back up to that 7% number and maybe above, time is going to tell. And I think that's going to say a lot about what kind of spring we're going to have real estate market wise. Overall, the big thing that we're seeing right now is that it's not so much that the prices in our markets have changed, it's the volume. We are on pace right now to have fewer homes sold in 2023 than we had sold in the worst year of the Great Recession. So it's not so much that prices are changing, but volume in the market, fewer buyers and fewer sellers. Anyhow, thanks so much for watching. Questions and comments, we love them. If you are looking to buy or sell real estate in Southern California, namely Los Angeles and Orange counties, definitely reach out to us. Don't forget to like, subscribe, and hit that notification bell. And then, of course, another plug, we're going to put in a link to that analysis we did regarding rents and payments going all the way back to 2000 so that you can take a look at that. Once again, thanks for watching. We'll see you again real soon.